Hi everyone, my name is Sage Young, a journalist at Unchained, reporting live from East Denver. I had the chance to sit down with portfolio manager and head of research at Decentral Park Capital, Kelly Yi. I asked her what her thoughts and what her views were on the crypto markets in the beginning of 2024.
We're entering, I don't know what stage we are, but early stage of a bull market. So basically, if you look at the ecosystem, we're really looking at three main parts of the crypto ecosystem. One is Bitcoin. Obviously, as you see the ETF coming out early in January, we're really seeing the mainstream entering the crypto space with now we have 40 billion Bitcoin small ETFs continue to grow. The second part, obviously, we're in East Denver, so it's an East ecosystem, and I think we are really at a critical point of East upgrade in terms of the modular chain stack, really changing how the performance of the Ethereum chain by offering faster and cheaper transactions. And lastly, Solana. It's interesting, we also have a Solana booth here, and you see interesting activities going on in the Solana ecosystem too, representing a very performing monolithic approach.
Also, I asked her what she thought about Bitcoin's latest surge and the role of new spot Bitcoin ETFs that were approved in January.
Well, honestly, it looks very fast, right, the rally. I was in the ETF industry for a long time. So usually, especially for true institutional adoption, I'm talking about wealth management platforms, RAs, warehouses. It takes time, right? They need to see the track record, they need to see the liquidity. So I wouldn't say we're all in yet. So current inflows are more driven by organic retail flow. So the institutions, once it's approved on the platform, it's gonna even grow further. So I think Galaxy has done a really good research report talking about the 4.5 trillion ETF market, wealth management market. 1% allocation to Bitcoin means 450 billion. So we're not there yet.
As an investor, how she balanced cautious optimism of builders versus firms trying to do pump and dump schemes.
Yeah, look, I think, building a crypto business is like building any other business, right? The difference is there is not a clear regulatory framework on one hand, but also there's no barriers to entry in terms of money, right? You can buy a token on the exchange and everything. So I think the market will keep being very volatile with, optimism leading to really high growth and then obviously big dump, right? That's natural until we have more of a better regulatory framework. In the meantime, I think especially people like me who has seen both worlds, we are trying to make our investment decisions not based on, pump and dump, not just based on sort of narratives, right? I want to invest in good businesses, but as a liquid venture, it allows me the liquidity and also see the price action so we can act more accordingly. So I think liquid venture as a structure and our strategy is really trying to combine the best of both worlds. Start with investing in a good theme or good business, look at the market action, but also pay attention to narratives. It's like what Warren Buffett is saying, right? The market can stay irrational than what you can stay solvent, right? So in a way that I think crypto investors, especially traditional finance people coming to this area, really have to think about how the market perception, the narratives could, fuel certain bubbles, right? But then you have to really pay attention to, I don't want to invest in bad businesses just because of narratives, and I can do that. Those illegal activities you mentioned, although there's no regulation. But I think the market is going to mature. The mainstream is already in Bitcoin. I'm really optimistic about the future of other builders.